Good evening, traders. Welcome back once again to our channel. And let us now see what Bank Nifty is planning to do tomorrow and what is our analysis for January 18th. And before that, we'll have a small discussion about what happened today. You can see in the day candle. Let's go to the day candle before starting off anything. So let me hide this one. Okay, yeah. See, in the day candle, you can see there was a continuous momentum in the upside, and then you have a halt candle, and then followed by the retracement candle. And then you could see there was a gap down open, and then market, it pushed the market upside and then closed a little on the higher side, meaning it showed a green candle. So what does this typically mean is that, if the high of this candle has been broken, if this high has been broken, then the market should continue its upper side momentum. That's the whole idea about this particular candle's meaning. So what happens is, after breaking out this high, the market could not sustain this high. This could not sustain this particular level. Even though it's broken, it did not sustain, and then it started pushing back down, and it formed another pin bar kind of thing. Now, what is the plan for tomorrow? Now, so what do we understand in this is, the sellers are also not strong, the buyers are also not strong, but comparatively, as per the price action, what you see, the sellers are a bit more having a control than the buyers. So that's the whole point. So I will be interested to take only on the downside, only and only on the downside, and I will be looking for my positions where I can take it little from the upper side, in the sense I don't want to go and buy something in the downside, but it would be safe to go and take a downside trade. But what happens most of the time is, most of the times when this kind of setups are forming, the market, when the low of this previous day candle low is being taken up, the market's momentum is going to be, it will be super fast. You can really experience this. It will be a good downside momentum, at least for 600 to 700 points minimum. I'm talking about in Bank Nifty, if the low is being taken up. Now, if you just go to a 15 minutes candle, and to be precisely, let's go for a 1 hour candle. So this will give you a better idea. So the 1 hour candle, see the price action. See, how does the price action work? It opened up here, did a small price action here, then pushed down, and then it consolidated. Again it pushed down, again it tried to move upside, and then it tried to move upside, and then the upper price rejection was forming, and then it tried to move down, and then it is getting consolidated. So is this forming a kind of similar kind of pattern kind of here? So what is that? What we can expect is, market, if market breaks this particular level for me, or if this break this particular level, so which is the level which I'm planning to take is this range. If market breaks this range below this level, I'm going to enter into a put position, but only after confirmation. See, for me, it's not like I don't participate in a breakout trades, because I generally don't want to participate in a breakout trades, in the sense I don't go jump into a trade just because the level is getting broken. Either I will be before the trade with a proper confirmation, or I would rather take the trade after a rechecking. Only then I will be interested to take. If it is leaving me and going, I will not be interested to take any kind of trades. I will not jump into any levels. Let it come to my levels, I will take. If not, I will be simply waiting and see I can save that money from losing. Now, I've drawn two channels here, and you can see the market is sitting in the top end of the channel. You can see the market, when it reaches the downside of the channel, it had an upside momentum, and then when it reaches the upside of the, you can see a downwards momentum. Now, if you draw this path here, you can see it went from here, and then it went here, again it went here, again it went here. Again, the path for me is to reach this particular level. This is what I was saying. So this level, which I am finding it to be roughly about this particular range. This is the level which I'm looking into it, which is 37,600. I don't know whether it's going to come in one day or whether it's going to take 2 days to reach, but this is the level which the market will ultimately reach if that level is being taken up. So this is the level which I'm looking into it. If I'm just going to pull the trend line a little bit further, so you will be having this level getting reached. And this is also an important level. You can see the market broke and then retested at this level. Market had a halt here, market had a stop here, market consolidated in this zone. There are a lot of people who had an interest in buying at this level. So market will try to reverse from this particular, and market will try to have an upper side momentum. So if this is happening, I would like to go for a Fibonacci. Let's go for a little higher time. I'll go for a 2-hour time frame. See, this is the previous swing low. This is the previous swing low. This was a decent previous swing low at this time. So I would connect from this level, from this low to this high. So we are currently in between 0.38 and 0.5. So what I am expecting is the market to reach this particular zone. This is the level which I am thinking for the first time, and it might drop a little bit down and then pull back. So this is a healthy retracement as far as I'm concerned. This is a very healthy retracement for this particular swing, which is roughly about 0.618, which is a very good level, which most of the people consider as a golden level. If I'm going to switch this level to little downside, if I'm going to consider from this swing low to this swing low, this swing high, so now where is the level that we are looking into is this particular level, which is in between 0.23 and 0.8. It's not even 0.38 level. So this is ideally a good retracement zone what we are expecting. Let's see how the market is reacting from this particular stage. And I'm saying, like, I generally do plan my trades. I actually plan my trades and trade my plan. That's how I generally do. So I used to do, like, go take a trade without having any plans. I just like blindly go for a call. Sometimes I blindly go for a put. Sometimes, like, not having any great, just looking into one green candle, I would rather pick up. And if one level is getting broken, I just jump into a trade for the call side. If one level is broken and if it is a good red candle, I just get into that level without even looking left or right of the, the formations. And yes, we would have made money, like, there, and that day we would have made money. Maybe the other day we would have lost the same money which we've taken from the market. So if we don't have a perfect plan, I believe, like, consistency in making money is the only rule of this particular market. If you are not consistent, if you are not disciplined, you cannot make even a penny out of it. You might be making here and there some money, but you will not make a decent money, a consistent money from the market. If you are really consistent, if you are really good, if you really plan certain things and don't work on too many strategies, just stick on 1 or 2 strategies, that's more than enough. If you are able to do that, just see to that strategy, you keep adapting that particular strategy at least for 6 months time. There will be days when the strategy didn't work, and then you will have to go and find why the strategy didn't work. There's nothing called a holy grail strategy. There's no strategy in this world is 100% working. You are working on a probabilities. So you have to find in a trade, or you have to find a strategy which works for you, for your mindset, for your psychological point, your financial management, for your requirement. So only then it is going to work, and you have to stick to the particular strategy at least for quite a period of time. Then you see the results will automatically come in, and you are going to stick to the same principle. You will not change it, at least because you are seeing the results. Why would you change the strategy when the results are coming to you? So, but you need to give enough time for it. But before getting into any kind of strategy, go back test it and go forward test it with a little quantity. Don't take huge quantities. Don't take huge money into risk. Just give that little amount of time, because market is still going to be there no matter what. Today, tomorrow, day after tomorrow, months, years, market is going to be there. We are not going to see the end of the market. Don't trade like as if tomorrow is the end or today is the end of the market. Nothing. The market is going to be like this forever. Market is going to make a good moves like this forever. Don't think that you missed a great opportunity. The markets will provide you opportunity every single day, every single time. So for me, I would be interested to take a trade if this makes a fake move upside this particular level. let me just mark this level. I would be interested if market makes a fake move tomorrow upside and then market pulls back into this level. I will be taking a position somewhere in this zone, and then I would try to hold the trade when the market is approaching this level, so that I will have some kind of profit zone coming into me when I'm reaching this zone. So what will happen is, even if the market is going to show some red candles in this zone, I will be having some profits to hold on to my mental stability. But for me, I need a rejection from the top. I need a price rejection from this particular zone. From this zone is what I'm talking about. Let me just mark the zone. And I wanted some rejection from this zone. If I'm getting a rejection from this zone, market should open up here, gap up open, and then start pulling down. Or market should go flat open and then move upside and then start coming down. That's when I will be interested to take a put position. I will not be interested to take a call position unless and otherwise. Like, I don't think like tomorrow it's going to happen to me. So tomorrow I'll be strictly trying to take only on put positions, but only when the market is doing the way that I am expecting to do. Market flat opening, going upside, and then started pulling back, I will be interested. Or market gap up open and then start pulling down, I will be interested. If market gap down open, I will be looking into a price action. I wanted the market to again touch this particular low of the market here. This area, I wanted the low to be retested, and then I will be interested to take it from here. So these are the three areas where I am looking into it, how to trade the market tomorrow. And hopefully, you would have had a better idea, the way that I explained. Let's see how the market is doing tomorrow. And thank you very much for watching this video. Please do like and share, and do subscribe our channel, and please do motivate us with your comments. And please write comments, whether it is positive or negative. Please do write comments, so that we'll definitely get motivated because of that. I'm really looking forward for better videos and better content in the coming days ahead and coming months ahead. And like I promised, I will be releasing the monthly P&L video by the 1st of Feb. So we've got another 13-14 days to go. So let's see how things are going. And any which ways, I'm posting all the day intraday trading videos. I'm putting it in the YouTube, so you might be seeing all those things. So thank you once again. Have a wonderful evening and have a happy trading days ahead. Thank you for watching.